When you hear the name Corning, what's the first thing that pops into your head? For most of us, it's one thing. But a pretty stunning earnings report just dropped, and it's showing how this 175-year-old company is quietly reinventing itself to become a critical player in the AI revolution. So how on earth did a glass company become this essential piece of our AI future? Well, let's dig in.
For years, Corning has been this invisible giant, right there in our pockets. Their Gorilla Glass is that tough, durable screen protecting billions of smartphones all over the world. It's an amazing piece of tech for sure, but that's just scratching the surface of their story.
Because the real engine, the thing driving their incredible growth right now, it isn't the glass we touch every day. It's the light we can't even see. I'm talking about optical communications technology, the stuff that basically is the internet, and now, it's powering the massive data centers that generative AI needs to survive.
So, what about these record-breaking numbers that have everyone buzzing? Let's break down this quarter because it really shows a major strategy paying off in a huge way.
First up, let's talk sales. They hit a record $4.41 billion for the quarter. Now, not only did that completely smash what analysts were expecting, it represents a staggering 14% growth over the same time last year. For a company this big, that is some serious momentum.
But here's where it gets really interesting. The real kicker? Earnings per share, that's a key measure of how profitable a company is, grew even faster. We're talking up 26%. And when you see profits growing way faster than sales, that tells you something really important. It means the company isn't just selling more stuff, it's becoming fundamentally more efficient, more profitable. That's the secret sauce.
The company's CEO, Wendell Weeks, put it pretty simply. But that simple quote really begs a huge question. How? How does an industrial giant just pull a quarter like this out of a hat? Well, the answer goes back to a plan they kicked off 2 years ago.
And that plan is called Springboard. Look, I know it might sound like just another fancy corporate name, but it's not. This thing is a strategic blueprint that has completely transformed Corning's financial DNA over the last couple of years.
The goal here was audacious, to say the least. They wanted to completely reshape the company from the inside out, making it leaner, more profitable, all while setting the stage for this explosive organic growth, powered by their core innovations. So, the big question is, did the bet pay off? Well, the numbers speak for themselves, and honestly, they are nothing short of remarkable. Let's take a look at the before and after. Okay, just take a second to look at this, because this table really tells the story. Since they launched Springboard, their operating margin, that's a key measure of core profitability, has jumped almost 4 full percentage points. That's huge. Earnings per share, the bottom line profit for shareholders, it has soared an incredible 85%. And free cash flow, the actual cash a company generates to expand and give back to investors, has nearly doubled. This wasn't some lucky quarter. This was the result of a deliberate 2-year execution. Absolutely fantastic. And you know what? They've been building momentum this whole time. After they launched the plan, just a few months later, they upgraded their goals. And now, they've hit their key profitability targets a full year ahead of schedule. It's this kind of consistent outperformance that gave them the confidence for what they did next. So after achieving all this way ahead of schedule, you might think they take a victory lap, right? Nope. Turns out they feel like they're just getting started. They're building on the incredible success of Springboard, and now they're setting their sights even higher. They see this massive opportunity right in front of them, and they are going all in. So what does all in actually look like? Well, they're upgrading their goal to add a staggering $11 billion in new annualized sales by the end of 2028. Just to put that in perspective, that's up from an already ambitious original target of $8 billion. So the question becomes, where in the world is all that growth going to come from? Well, it turns out a huge piece of that confidence comes from a brand new blockbuster agreement that puts Corning right at the heart of the AI build-out. They've just signed a multi-year deal with Meta. Yep, that Meta. And it's worth up to $6 billion. What for? To supply the next-generation optical fiber and connectivity that Meta needs for its massive AI data centers. This isn't just some supply deal either. This is a long-term partnership to really strengthen the U.S. tech supply chain. And this deal really shines a massive spotlight on the one part of Corning's business that is just absolutely on fire right now: optical communications. This is the division of the company that's making the physical backbone of the internet, and by extension, AI.
Just look at these numbers from the fourth quarter alone. Sales in the optical segment up 24% year over year, which is great. But again, look at the profitability. Net income skyrocketed 57%. That is the power of selling highly advanced, high-value technology that is in massive, massive demand.
So, what are they actually selling? Well, in simple terms, you can think of it like superhighways for data. But generative AI, it requires lanes that are wider, faster, and packed way more densely than anything we've ever built before. These advanced optical solutions, they do just that. They allow AI data centers to handle these staggering workloads. For us, that means faster, more reliable AI tools. But for the companies building them, it's an absolute game changer.
So when you take a step back and look at the big picture, this isn't just about one great quarter or one big deal. It's about a fundamental shift for one of America's oldest and most innovative companies.
I mean, this is a company that has been on the cutting edge of materials science since 1851. Think about that. And now they're taking all that deep historical expertise and applying it to solve one of the biggest challenges of our time: how to handle the explosion of data created by the AI revolution. Their CEO, Wendell Weeks, he summed up the scale of this ambition just perfectly. Their plan isn't just for some nice incremental growth. No, it's to effectively double the entire company. It's an incredibly bold vision, built on decades of innovation, and now it's aimed squarely at the future. And that leaves us with a really fascinating question to chew on. As the world races to build out the infrastructure for artificial intelligence, could it be that this 175-year-old glass company is becoming the quiet, indispensable backbone holding it all together? Based on these numbers, the answer seems to be a resounding yes.